Okay, so let's talk about aluminum in 2025. What a year. Seriously, it was a story that had everything. Political drama, market crashes, and a hidden supply crisis that just changed the entire game. In this explainer, we're going to unpack how this one metal's crazy year tells us a whole lot about just how fragile our global economy really is. So let's get into it.
All right, just look at this chart. If that doesn't scream roller coaster, I honestly don't know what does. This right here is the price of aluminum over the course of 2025. You see this insane plunge, and then this absolutely spectacular climb back up. It's just chaotic, and it really makes you ask one big question.
So what on earth could make a super fundamental commodity like aluminum act this erratically? Was it just pure market panic? A real fundamental shortage? Or was there something else going on entirely? Well, we're going to figure that out. We're going to break down the whole year, piece by piece.
Here's how we'll do it. First, we'll get a handle on those chaotic price swings. Then, we'll dive right into the political tariff battle that kicked off all the panic. But the real story, the one building quietly in the background, was a global supply squeeze, which led to an inevitable price climb. And finally, we'll put it all together to see what we can learn from this absolutely wild year.
You know, every great mystery starts with the evidence. So, before we get into the why, let's just look at the numbers. They really do tell the beginning of a fascinating story.
Okay, so this table really lays out the tail of the tape for us. You can see things start off pretty strong in Q1, right? But then look at Q2. That's a big dip, not just in the low point, but in the average price too. But then fast forward to Q4, and whoa, it's not just a recovery, it's a massive surge, hitting a high of almost $3,000 a ton. So what's the story behind these numbers? Let's start with that big drop in Q2.
So, what happened in Q2 to cause that huge drop? Well, it wasn't a problem with the mines or the factories. Nope. In the first half of the year, the story was all about one thing: politics.
So, in that first quarter, the market was basically running on fear. Even before any official announcement, just the rumor of new tariffs was enough to spark a frenzy. Companies were rushing to import as much aluminum as they possibly could, creating this bubble of activity based not on real demand, but on pure political anxiety. And then, boom, it happened. April 2nd, the tariffs are officially announced. All those rumors suddenly became very, very real. And the result? A massive market-wide sell-off. This single political move was basically the pin that popped the entire bubble.
And this really captures the reaction perfectly, doesn't it? First, there's shock, and that's immediately followed by a rapid retreat. You know, traders, industrial buyers, everyone panicked, and the price just went into a complete nosedive. All that fear that had been building up for months was suddenly unleashed all at once.
$2,300 per ton. That was the bottom, the absolute lowest point the price hit during that chaotic second quarter. And it was a direct result of that one tariff announcement.
The bleeding only stopped when word got out that, hey, maybe these tariffs are getting postponed. The market could finally breathe a little sigh of relief, which just goes to show you how much it was hanging on every single political headline. But here's the thing. While everyone was glued to the political drama, something much bigger, a more fundamental force, was quietly building in the background, and it was about to change the entire game.
And that brings us to the second half of the year. This is where the story shifts dramatically, away from political headlines and towards hard economic realities. The fundamentals, good old supply and demand, were about to take center stage.
Okay, so what was going on? Well, you had this perfect storm brewing on the supply side. First off, global stockpiles of aluminum were already at multi-year lows. There just wasn't a lot of extra metal sitting around. Second, you have China, a gigantic producer, literally hitting a hard cap on how much they could make. And third, through all this drama, the actual demand from industry for aluminum, it stayed strong.
Let's just focus on that China factor for a second. We're talking about the world's largest aluminum producer effectively hitting a government-mandated stop sign on its output. This meant they couldn't just turn on the taps and produce more to meet demand.
45 million tons. That was China's production capacity cap, a hard number that meant no more new additions. This wasn't some temporary shutdown for maintenance. This was a structural limit on the entire global supply.
So let's recap. You've got shrinking stockpiles, a hard limit on the biggest producer in the world, and demand that just won't quit. I think you know what that means. The stage was set for a powerful and pretty much inevitable price climb. And just look at this rebound. The average price jumped from about $24.74 in Q2 all the way up to $27.32 in Q4.
This really shows that the supply squeeze wasn't just a minor factor anymore. It had become the dominant force driving this market.
Now this right here, this is the key moment. This proves everything shifted, because in Q4, the US actually doubled down and hiked tariffs to a whopping 50%. A few months earlier, that news would have sent the market into an absolute freefall. But this time, prices, they barely even flinched. In fact, they kept climbing. The real-world need for the metal, the actual supply and demand, was so powerful it just completely drowned out all the political noise.
So, after a year on that wild ride, what's the takeaway? What do we learn from all this? What does it all mean beyond just the numbers on a trading screen?
So, why should any of this matter to you? Well, because this isn't just some abstract number. The price of aluminum is baked into the cost of our cars, our phones, our airplanes, even the can for your favorite soda. This kind of volatility doesn't just stay in the market. Eventually, it hits all of our wallets.
The story of aluminum in 2025 is really a textbook example of what we can call supply chain sensitivity. It shows that our modern supply chains are incredibly fragile. They can be easily shaken by a single political announcement, but at the end of the day, they are still beholden to the hard limits of physical production and supply.
And that really leaves us with one final, pretty crucial question. In a world that's filled with geopolitical tension and, resources that are getting tighter, is this kind of wild roller coaster ride the new normal for the critical materials that build our modern world? Something to think about. Thanks for joining me for this explainer.